Good morning and welcome to Market Monday for November 11th, 2024. Happy Veterans Day. We appreciate so very much your service to our country that allows us the freedoms that we enjoy today. Thank you. With all the election noise, did you even hear that the Fed cut rates again? Just one cut this time, on the back of two cuts in September. Of course, the last meeting of the year being on December 18th, where we'll see if we'll get a fourth cut during the cutting cycle.
While in one sense, that is welcome news to investors, as generally speaking, lower rates make capital cheaper. On the other hand, it reduces the risk-free return we've all been enjoying for the past few years. Treasuries, money markets, savings accounts. As rates are expected to continue this downward trajectory, eventually those trillions of dollars in safe money accounts will look for a better home.
All right, I guess we're just going to have to do it. Acknowledge the post-election rally, that is. For context, here's the performance of every day after the election since 1928. About half red, half green, perhaps skewing a bit to red. Extreme readings, say over 2%, tend to be more down than up. And since the mid-90s, every post-election day has moved more than 1%. Of course, we have a large move up the day after Biden won in 2020, and the largest post-election day in history as Trump won in 2024.
Looking at one day is fun and all, but not that significant in the grand scheme. So let's take one step back and look at what's happened for the rest of the year. Again, here are the election dates back to 1928. This time, a little more green than red, especially if we go back 50 years. Certainly more common to be up for the remainder of the year, despite this being blue or red. Some notable years. Here's .com right here, George W. Bush first term. Here's the peak before the global financial crisis, Barack Obama first term. Here's Trump's first term. Here's Biden with the largest post-election end-of-year gain in history at 11.5%. So while we may think the market is completely determined by what it thinks of the president, good or bad, it's often much bigger than that.
That's some context of what may happen next, but what's happened so far? Has it felt good to be an equity or stock investor so far this year? Does it feel like the good times are rolling? Well, not so fast. See that there? That's this year up to the election. And here are the other election years since 1950, January 1st through the end of October. See that? There has been no better year than 2024. This is the best. Has been the best. It has never been better than this year. But folks, we aren't saying that the market can't continue higher. Over time, that's what the market does. What we are saying is understand how good this year has been, historically, and don't expect it to be this good like clockwork every year in the future. We're all humans, and human nature says things that have happened in the recent past we tend to expect the future to be the same. Recency bias is the fancy word. Let's be measured in our expectations and stick to our long-term investing plans.
And today we'll leave you with, remember last week we shared how Emory University in Atlanta disclosed around $15 million of Bitcoin fund exposure, and how the state of Florida CFO Jimmy Patronis was exploring building a Bitcoin reserve for its retirees? Well, here's the state of Michigan, Department of the Treasury, not only with a $7 million of Bitcoin fund exposure, but $11 million of Ethereum fund exposure. Paying attention yet? Have a great week.